What's up everyone, this is Kenny here from Property Stories. So today we're going to talk about something called the fractional reserve banking. You ever wonder why the bank actually seems so rich one, and why the bank is allowed to print money out of thin air? Yes, the bank is the only organization in this world that is allowed legally to print money. If you and I were to print money at home, we will get to jail, okay? Because we'll be counterfeiting money. But the bank is allowed to do that. So how come the bank doesn't seem to run out of money to lend out to people like us for everything credit? This is one of the reasons, okay? This the license to apply this fractional reserve banking on the amount of money that they collect is the reason that they don't seem to run out of money to lend out. Okay? And frankly speaking, this is also when I discovered this, right, my mind was blown. Actually, I was thinking to myself, this business is like a show win business. It's like I'm owning a casino. No matter how many people play, of course, I will definitely lose some, but the odds are rigged to my favor. This is how I think, and why not actually just ride on this? Knowing this, why not just ride on this wave and safer to become rich and accumulate wealth? Okay, I'll show you what it means by this fractional reserve banking and how it works. All right, let's start. What, how, why, and the last part is what's in it for you. So what is the fractional reserve banking? This definition I take from Investopedia. You can Google. This Investopedia just take this as a system in which only a fraction of bank deposit are required to be available for withdrawal. This is like magic, right? No matter how much you put inside the bank, you can also withdraw one. You can withdraw and close account. The other person also withdraw and close account anytime. So what that allows this to happen? This is the fractional reserve banking. But actually this one is a very general. Let's see how it works. Calculation. So suppose today you deposit 1,000 ringgit. The reserve requirement is 100 ringgit. So what is the reserve requirement ratio? 100 over 1,000 times 100%. This is 10%. So what does this mean? This means the bank. What does this mean? This means the bank get to keep 10% while lend out 90%. Must keep 10% while lend out 90%. This is the bank is okay. So with this 10%, right, how much money is created in the system? The maximum money created in system follows the formula below. Money multiplier equals 1 over reserve requirement. So in the previous example, we can see the reserve requirement is 10%, right? So 1 over 0.1 equals to 10 times. Meaning that just now that 1,000 will be deposited with the bank, you can create 10 times. No, multiply is 10 times. Becomes 10,000. You put in 1,000, you can potentially create 10,000 in the system. Okay? So what is Malaysia Reserve Requirement Ratio? This Malaysia Reserve Requirement Ratio is known as SRR, Statutory Reserve Requirement. Okay, it's set by the central bank, Bank Negara. Okay, so I can't find the latest information even on the website, so this one I got from CEIC. Statutory reserve requirement as of March 2024 is 2%. Commercial banks is at 2%. So all the banks that you see down there is 2%. Outside 2%, okay? So Malaysia SRR is 2%. If 100 ringgit, you keep, what it means, right, just now, if it's 100 ringgit, you deposit, the bank keeps 2 ringgit and lend out 98. So what's the money multiplier? Again, we apply the same formula. 1 over reserve requirement, we get 1 over 0.02%, which is 50 times. You can see the number is 5 times. Meaning just now that 1,000 not become 10,000, no. This time it becomes 50,000. 50,000, okay? It's a lot of money. It's a lot of money, right? Imagine how much the bank actually deals with a day, in and out. This one is, don't you see, is literally creating money out of thin air. They don't have their 50,000 to lend out 50,000. They just take that first 1,000 from you. Then they create that money, that 50,000, they have 50,000 to lend out. Really creating money out of thin air, right? There's no other business that is such amazing such as this as a bank. Uh, so next we go to what does this mean for you, alright? So you understand about fractional reserve banking and how it multiplies the money in the market. So what does it mean to you and me as a layman? First, you understand, right, that this industry, the banking industry, is a highly regulated industry. Highly regulated industry meaning it's a high barrier entry. You need license. Not everybody today, you feel like opening a bank, you go and open. Okay? But today you feel like being a developer, you can, right? You just get a piece of land. You don't even need a piece of land actually. You have the expertise, you go and find someone with a piece of land and JV, that's it. You are a developer. But today you cannot do that. A bank, you cannot do that. And have you seen a bank actually bankrupt before? I'm not lah. Because every time bank want to bankrupt, the big bank can actually swallow the smaller bank, no problem. If it's the bank too big, just split lah, too many, and sell parts by parts. You even whatever you want to do also, you want to sell your shares in the bank also, you need the central bank approval. Okay? You want to sell your business, you divest your business under the bank, you want to sell out, you also need the central bank approval. Everything also needs central bank approval, so very highly regulated. Today you are a developer, you want to sell that price, if the bank can support, you sell lah. You want to sell your business or you want to bankrupt your subsidiary, to wind down your subsidiary, voluntary wind down, who can say anything? Nobody, just you wind down yourself. So in this highly regulated environment, right, it actually benefits us as consumer if we know how to take advantage of it. Like sometimes you go out, you apply for mortgages, right? I know that this one bank lah, they are very competitive, the rates very competitive one. They can actually, let's just say a bank give you 3.85, they can go 3.65. But here's their condition. You must put 200,000 with the bank. No need to log in one. Their condition very simple. 200,000 become their priority banking customer. You put in their savings account. You put today, tomorrow you can take out. They will open for you a priority banking account. You put that 200,000 today. Tomorrow you can take out. Then they will give you that 0.2 difference. Whatever other bank give you, they can give you the lesser 0.2, 3.85. Never mind, I give you 3.65. But you must put that 200,000 one day only. And the condition is it must be funds, fresh funds, outside funds. Sometimes, yeah, we know you maybe have like other funds in other account, and then you transfer to there. Or other funds in other friends or family account, you transfer to that. Cannot, it must be outside from the bank, transfer in that 200,000, then can. If you stand at the bank point of view, when you saw what the fractional reserve banking allow you to do, it will capture that 200,000 as a deposit, right? And 200,000 times 50 times. You just need to put one day, and I got 50 times amount. How many million? 10 million to lend out next day. 10 million to lend out next day. Who don't want? I only need to give 200,000, I can lend out 10 million. Okay? So it makes sense for the bank. That is how you take advantage. The next one is that you see developers sometimes cyclical, right? Do up down. Sometimes don't do well. Sometimes the dividend also not there. Like this year, the launching also slow. Last year also slow already. COVID time, don't say lah. Most of the developers are suffering, crying down there. Okay? Even agents also. My experience during COVID, yeah, I also crying. But have you seen the bank suffering during the COVID time? Yeah lah. Only dividends only didn't declare. That's the first time I saw the bank actually never declared any dividends. But other than that, every year making billions. Now after COVID, right, when the OPR keep on increasing, come back to normal. Who's the one that first to benefit? Not you and me, bro. Not you and me, sis. It's the bank. Okay? The bank first. We are the one here dying here to pay our installment. Installment keep going up. Is the bank is the one. Every year billion deposit profit, and then declare as dividend. When I mention so many times dividend, you know where I'm going, right? It's better to own the the business than to buy the product of the developer, which is the property lah. Buy the bank stock lah. So as I explore this industry, banking industry, I find it very fascinating, to create a system that you are actually legally printing money. Nobody can stop you because you got the license, and this license is well protected. Nobody can actually open a new bank. So that's why when you see the central bank announce that they're giving away 4 digital bank license, everybody forming consortium. Hey, want a JV? Want a JV? Everybody forming consortium to apply for their license. You see how valuable the license is. So now, even now, there are some digital banks. I don't need to mention name. You all know who is giving like 5% per annum for 1 month. They want you to put just 1 month inside. Why? Because they want to attract deposit. If the deposit enough, they can start rolling already. Which business are so good? That's why the lending business makes so much money. And when I say lending business, you all must understand, the bank don't just make money by lending, from interest. There's so many other products that is in the bank, that under the bank that can make money. But I'm not going to cover that today because since we are talking only just about fractional reserve banking, okay? So the reason I share all this with all of you is that I hope that you can see on a different angle, okay? When you actually buy a property, right, other than you who benefits from the equity or from the rental or you lose money, another way, it doesn't mean you always get money, or you are the one paying the loan, who else is the one that's benefit? Who else is the house? Because the house always wins, remember? In this case, it's the bank, okay? The bank always wins, always. So the question now becomes like, how can you ride the wave and take advantage of it? You ride the whale, you follow the whale, you'll be stable, right? Because the whale is the one taking all the hit. So you small fry, just follow the whale, it's okay. By following the whale is by buying the bank share. In this case, I want you to be able to see these kind of angles when you look at your investments, okay? I hope that it helps. This is Kenny here from Property Stories. As usual, you want to check out the properties that I have for sale, you can just click the link in the comments down below. I just pinned the comments. With that said, I'll see you again next video. Bye bye.